Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thanks for doing your part for coming on in each and every day, and we'll do the same with keeping you the accurate updates and not wasting a second more of your time. Let's go into the charts. Bada bing, bada boom. Here we go. Well, it looks like we had that dumperoo from the 0.5 level, and then we were looking for that reclamation slash liquidity grab 100x bounce, and we got slight of that before dumping lower and reclaiming some of this wick to the left on the daily time frame. Let's go ahead and look at the heat map from High Block. What is the heat map? Well, it's when people lock their liquidity in the charts to be burnt to a crisp by the market maker for not using a stop loss, and we get to see where those liquidations points are thanks to High Block Capital at $70 a month. So do consider subscribing and hitting that like button because you can get that for free if you just tune in. So as it looks like here, we were talking about coming back to the 100x pool previously over here. Let's zoom in. So after we had the drop down to here, we talked about coming back to this 100x pool. Whoa, what happened there? Let's zoom in again. All right, so we had the 100x pool up here at $207 million, which they have yet to reclaim, and they dropped even lower to get some of that external liquidity on the 7-day time frame, I believe it is. We'll take a look in a moment, and it opened up some other bubbles, including these 100x guys at 190 million, which they proceeded to say no way, Jose, and came back and reclaimed immediately.
Fatality.
Yes, and they take those guys without hesitation of a second thought. So you don't want to enter a short into a red candle. Not a good look. So they came back and reclaimed some of that, and they are double top, giving the perception of a double top here, which at that time there was some longs that opened up. We were running on no sleep, so we missed the update for that. Apologies. But they did come back down and get this 100x pool of 114 million and proceeded to bounce off the corpses of those liquidated folks. And here we are again. We had a rise up earlier today towards the, when was that actually? Let's go to the precise time of it. I think it was about, yeah. So we started to rise up over the night in the earnings report, level. So at that time we started to rise up, and it looks like there's a large bubble of longs opening up at that region, which particularly this 100x pool of $218 million. I think they project these levels based on the leverage used and of those pools, and they project them based off the math of where that would normally be if you're using a full margin thing and not cross profile. I don't think it's actually liquidation points, but it's projected ones, but they do come back to them just the same. So they have yet to come back to, actually they did wick off that 218 million to the dollar, so that pool is out for the count.
Fatality.
And that guy is gone as well. And you have their partners in crime at 50x and 25x down here if they decide to go lower. At this time, it looks like they've been stacking up some shorts on multiple occasions here. So this is what a rounded bottom looks like. When you start to make a rounded bottom, what it's doing is it's pooling the shorts in order to make a immediate stab to take them. Think of it like you're going fishing and you're rowing a boat out to the place where the fish are. You cut your engine before you get out there, and you're drifting. So they're drifting and creating this rounded out bottom to attract the fish to the pool, and then they take their harpoon spear and grab them all at once. Well, in this case it would be a net, so they're casting their net and they grab all those fish after they gather them. So that's what a rounded bottom is doing, and price action is just this pattern of a psychological trap being laid for these fish to be grabbed by the market makers. So that it looks like to me that it's going to stab up to this region, at least to the 50x level of some of these, maybe the range level here up at 27.2. This is getting mighty thick up in this region as you see the noodles starting to stack on these on these different attempts to go to the downside and creating this rounded bottom. This is just what it looks like on the 1 minute time frame. So let's expand our vision to the higher time frame. Shout out to everyone here. We will look at that USD JPY for you, Dingo, as we get forward in the stream. I don't have to be at work until later afternoon, so I got more time to do a Asian update. I had to catch up on sleep last night. I was running on fumes, literally. I didn't sleep at all the night before, getting too euphoric in the charts for the NASDAQ, so I had to reclaim some of my sleep. My credit cards were overdue for the payment on sleep. All right, so on the 7-day time frame, we got 10 billion that we got stabbed out here. So this was the 7-day pool that they came back to grab, and it looks like you still have 3 or 4 billion down here at this region on the 7-day induced time frame. But as of this moment, on the 7-day, you are basically clear for launch up to the 27.85 region in terms of the imbalance in the 7-day time frame now being to the upside. This is music by Shingo Nakamoto, if you want to check out their live music. I think it's all original by him. Anyway, if you look at the 1 month time frame, you also see the imbalance still existing up here at 27.8, $20 billion and 30 billion if you include the ranges just beyond that. So a stab up to this region is inbound at some point. Today is Run for Profit Friday. On the scale of things, you have False Move Monday, which likes to fake out both sides. You have Tuesday, Wednesday, the developing move for the week, which in this case was to the downside. Thursday, midweek reversal, which after a slight consolidation went and stabbed to the downside and started to create that rounded out bottom. So is the reversal to the upside for Run for Profit Friday being this stab to 28K? Could be the case. There is an imbalance expressing that on this monthly time frame, just to keep you on that heads up. We did reclaim some of that wick to the left, so a potential double bottom could be in on that time frame if you look at it as such. However, the one thing that has you worried is for upside potential being negated would be the $150 billion that is existing beneath the price here at 25.6, 25.4, and 25.2. You have 50 billion pools, over 50 billion pools at each zone. So that is a large amount of liquidity to just leave sitting there. Do they stab this before they head out? And this coincides with the pool that we've had remaining here for the last few weeks. So this pool needs to be reclaimed, and it would be nice to see some divergence spawned off of that before we go out. So in this case, on the diagonal fib level, since we rejected off the 0.5, the next level inbound on this diagonal fib / trend line, whatever you want to call it, would be this 382 level here. So if we were to come down into this region and bounce off of the 382 at some stage, that would put us on Saturday 7 a.m. and then we could start to come up out of that region. So if you bounce off this or even wick down into this region, that puts you around Saturday if the run for profit is to the downside to get this 150 billion off the table. The expression has been to the downside, so this could be a impulse retrace continuation down to this zone, just to be noted if they've already expressed the intention to go lower, that could be the case. Let's go to the higher time frame of the 6 month, which also expresses that imbalance to the downside. And this is where juxtaposing your time frames becomes important, because these external pools combat each other, and they go to take out these pools above so they can continue lower, and they take out these pools, these larger pools, lower so they can make a surge higher. There's all this if then about the pools, so you have to juxtapose them every time and keep them fresh in your mind. So at the 25.5 region on the 6 month time frame, you got $86 billion. You have $72 billion at 25.2, $52 billion at 24.9, $64 billion 24.6, and $82 billion at 24.3. Starts to taper, and by taper it halves itself, but that's still a lot of money at $46 billion at 24 even. So at the bare minimum, pardon the pun, you could go all the way down to 24 even, and that would make sense on this pool of longs to knock out the sell side liquidity, they call it in smart money concepts, because it forces them to sell their position at a loss or liquidate them. All right, so if we look at the yearly, though, it starts to fade to green, or aquamarine, if you will, because the aquamarine level is at $100 billion, and you start to see the pools that we're about to lose this range, unfortunately, and then we will only have downside to look at from this June region last year. So this was June 8th of last year, we had that drop. So are we going to get these pools, a stab at these pools again before a summer retrace idea? So you got 132 billion percolating at 32.4, which looks mighty juicy. You got 100 billion at 32.8, 100 billion at 33.2, and 78 billion 33.6, and 82 billion 34 even. So these pools up to 34K are looking ripe for the picking at some stage. When does that stage occur? Well, it would have to occur after the imbalance is realized on this time frame. So if you were to come down to the 25K region, or 24.8 for that matter, and knock out these $200 billion down to 24.4, that would be a reasonable statement to say that that imbalance would be reconciled and they could start making that ascent from that time. Or would the bearish narrative be in and people start selling off their positions to bring us all the way lower to the 22.5 region, where there's a large pool as well? The sky's the limit, and nothing is set in stone until it is, so we just keep our possibilities open to the fact. So let's go to the 1 month time frame and head into the Binance chart and start to take a look at our indicators. Shout out to all 2 of you here. All right, so here we go. Let's go into the Binance chart. So we got that reclamation of the wick to some degree. We didn't reclaim it in full, but we did get most of this wick on this time frame, which is what happened. So let's go to where we were talking last time. So our previous stream, which was on No Sleep at 5 a.m. my time, we were talking about this rise up to this region to take some stuff up and then possibly retrace down further. We did say it could be down in this pool, but we weren't set in stone. We didn't know when we would stream next, so we just left it at that. And we did start to make our descent, but we did not make it all the way up to the region we thought until today. So we can erase this and erase that, for that pool is now gone. And now let's start fresh from the get-go and turn on our oscillators. What are our oscillators here? Well, this is Momentum Master, link in the description for more. It is one algorithm suite created by yours truly. MomentumMaster.info for more information. Scroll down to features and toggle at your leisure. I think all of you watching either have it or have been watching a long time, but this is just for others who may show up later. So you could toggle these features at your leisure and read about each component. Here we go. Let's go into the oscillators. So As we go into, we'll start from the daily descent. I think the 5-day and the 3-day did close, so let's take a look at how the 5-day closed. That was the last 5-day close, so that was what happens when your cross down event up here, which we went over since Sunday, April 16th. This is what these cross down events lead to, in case you were new to experiencing these things. Now you see what the power of a cross down on these time frames leads to. So these leading moving average of the baselines do lead you to the success of the shorts, even if you do have these kind of fake outs. The rejection at the skinny boy baseline was your signal for that short to the downside on the 5-day time frame. We talked about the potential alarm cross as well, and the alarm cross at the closure beneath the baseline could have been your formula to success, and the money flow also flowing up above the RSI here was showing the struggle to continue, which it did on those 5 days, closed down to this region, which got a buyback of some liquidity here. And so you're seeing this opening up of the momentum of the Williams on the 5-day time frame. Could this continue? You're already at the reset point for the 5-day at 0. The weekly has nearly reset. The 3-day has reset. The daily is nearly reset. So you're at all these higher time frames reset. I haven't looked at the 2-week in some time, so let's see how the 2-week is doing. The funny thing about the 2-week is you can look at the 2-week and you can also see the 2-week has reset some of its stuff. It's still overbought. Generally, when you get to this level, you'd like to see this average come up some more. So this is where you get the pinnings of the 2-week time frame, because the average needs to get closer to this before it fully resets. Barring some sort of black swan event, you don't normally just come back down to the average right here. So this suggests that the average continue on its meandering path up here at some stage. So the 2-week time frame is good. However, you're getting the money flow above the RSI here on the 2-week time frame. One thing I was about to say was, if you check out the 14-day as opposed to the 2-week, their starting and closing times are different, so the data is slightly different sometimes. So that's just one little interesting tidbit about the 14-day versus the 2-week. Even though the time frames are the exact same, their start and end points are different, so the information will shift ever so slightly. So that's one interesting point. All right, so we'll go down into the 3-day time frame. The 3-day time frame closed a day prior to the 5-day, and we saw that also ensue with some downside. So seeing the reset of the stochastic, and the money flow is now getting beneath the RSI, suggesting that a buyback here of the money flow could be in order soon. We are getting the Williams down into this green region of oversold as well. So is it going to start out this rounding out process of the double bottom to the upside? That is the question that we could be seeing here answered. And you're seeing this adaptive moving average that coincides with this bottom-like pool. Are we going to go down and kiss this moving average of the weighted moving average before we continue? Why do I use weighted over simple? Well, it's simple. Simple moving averages are kind of not factoring very much, hence why they're simple. They're for a simple trader. The weighted moving average weights the price more tightly, which gives you a conservative outlook, and a lot more times you'll get to that rejected point on the weighted moving average, and then you could consider closing your position. And then the simple will have you somewhere up here, somewhere just out of reach, and you might miss your target. So the weighted moving average is stickier to price action, so it gives you a more conservative goal. And if you like to be conservative, that's why I use the weighted moving average here, and that's what this 200 weighted moving average is. And what is this orange and yellow one? That is the adaptive moving average, and that is done by Mr. Kaufman, the KAMA as they call it, and that is the adaptive moving average, which factors out noise, and it sticks to the trend and volatility very nicely. So it gives you a very nice point of entry as well. As you see here, you had that nice rejection at the AMA, and boom, we were down. So these averages are not your average moving average, pardon the pun. They are for the smart traders. So if you're smart, you'd like to throw these on your chart. Okay, so here we're coming down beneath the 3-day average. This is getting oversold as well, so we could start this rounding out process for the rising sun event to the upside. The cloud is still thick on the 3-day time frame. I'm not seeing a curvature to the downside just yet. It could still see some more upside here as we see this angle. Like, this angle could still continue even higher before it makes its curve at the angle we're looking at here. As of this moment, you could still see some surge to the upside, and this could even continue, even further. It doesn't need to necessarily, there's no rounding out on the bottom of this either to suggest that it is continuing lower just yet. Okay. So that is the healthy, thick cloud that we have on the 3-day time frame, which is nice to note if you're trying to think of your long positions health. And if we look at the daily time frame, we had seen that we were previously getting to the 50 region of being overbought, and these last few days of downside have reset the stochastic back down to 22.3, and the money flow is getting above the RSI here, which suggests more downside, potentially a stab to this pool. Generally, when you have the money flow above the RSI, that suggests some retest of the RSI here. So similar fashion to the opposite side, if the money flow is beneath the RSI, you start to see this gravitation back up to the RSI. Does that happen immediately? Here it was beneath the RSI and it took us to the downside some more, and you got to that oversold status on both, and that's when it started to come up. So will this necessarily always the case? So all of these things, all of these components in confluence, and looking at where the Williams is at that time, and all these other things like the leading MACD here, is the MACD crossed down? It looks like it has. So this leading MACD is been doing some meandering here, crossing up and crossing down. So this has not yet been the most reliable thing, but you cross up, cross down, cross up, cross down, and then this cross down last Saturday had you at hello for more downside here on May 5th. So the cross down does have you before the event occurs. So when you see the cross down, you assume, well, there's going to be more downside until there isn't on this leading MACD. So this MACD is not a latent MACD. It was a formula to be more sensitive. And once again, if you have Momentum Master B, you can add alerts to that MACD on whatever time frame you like. So if you want to see the daily cross event occur on the MACD, you just need to click these 3 dots, go to add alert on the time frame of your liking, and then you go to pump or dump. I made it as simple as possible. Pump is when they cross up, dump is when they cross down. It has already crossed down. You can open one for each. That's what I do, and I leave it perpetually open because I have a pro account, and then it just notifies me it's crossed on that time frame. And that just means that you're slated for more upside or downside. And so it's saying dump at this time. So are we slated for more downside? Well, until this leading MACD crosses, we won't have that confirmation of an upside movement just yet. All right, so the one good news of the saving grace, if you will, of this daily time frame is we had the cross up, and this is what some guy in the Discord called me the sleepy cross up, because it crosses up and then it goes to sleep for a little while, and you have that extended W. We were talking about the extended W potential for some time now, but the extended W idea of coming down, some people could call it an ABC pattern. There are many ways to skin a cat. You can have this ABC to the downside, and then it will give you that nice reversal potential, the higher potential of the reversal. So are we seeing like a ABC like this, like a kind of ABC within an ABC within an ABC? You know, you got these kind of ABCs. It seems to be the cool thing to do these days, but it's basically not making a higher high or a lower low. You're looking at the lower low idea for the reversal pattern. But basically, yeah, if you can reclaim, which we did on this daily close, we reclaimed the baseline. If you can reclaim these, that's your path out of here potentially. And these sleepy cross-ups do sometimes bang with a fervor as they create the divergence of the trapped longs. So if you're not in a long, then you might be considering it because the short is getting potentially fatigued at some stage with this entire thing being one big A, B, C. So if we come back down to here at some stage, are we going to see ourselves out of here is the question. All right, so you're getting this reclamation possibly of the thin boy on the daily time frame cross-up event, which has still yet to be negated. The thinning cloud is also looking nice on this time frame as well. If you go up here to look at the cloud, it is not as purple as it has been. So even though we had this massive dump, there is a red vector volume to that dump, but overall the volume is starting to taper on the sell side by the looks of it. So are you starting to see some buyback potential here on these time frames? While we had this red candle here, this is a new formula that I don't get into often because I'm still trying to understand it myself. What I did was I front weighted the... Okay, so I'm going to go over something new. Hopefully you guys can listen to this. This is your money flow. Consider the money flow. So this is a new formula not listed anywhere because it was made after we released the website and the product of Momentum Master Suite. So this consider the money flow gives you these weighted arrows here. Okay, you see the purple and the blue. Now this will become lengthier dependent on the volume of multiple time frames. I want to say 7 different time frames disparity combined. So it is a cumulative time frame volume delta. So here, this daily time frame was massively red. Overall, it was massively red on this daily time frame, but overall across all the time frames, it was net positive. So there was more buying pressure here than there was selling pressure. So on this daily candle close, you could have seen that there was more buying pressure and potentially scalped a long out of that idea. So these things telling you that there is more selling pressure in this green candle, and then this red candle had some buying pressure overall, tells you could basically ride these up. Now it gets more interesting when you drop to the lower time frames. Like if I go to a 12-hour time frame, it's going to have more arrows here as it closes the candle with those arrows intact. I'm still trying to understand how to read it, but sometimes it gives you the fact that you had more selling pressure and a buyback wick showed that there was more interest to reverse here too. So yeah, there's different things you can read into it, or you could just turn it off if it gets too busy using consider money flow. I considered the suppression because the suppression also sometimes on the higher time frames can tell you where you're getting suppressed by the higher time frame. As you see here, we are getting suppressed by the higher time frame on these ideas, which could have led you to the idea of going to the downside more. As of this moment, we have yet to flip the higher time frames to the upside, so we could be getting suppressed is the idea. I turn this off as default because it gets a little busy for my eyes. All right, so on the cross down, we had on the 12-hour here, we had a huge buyback wick and a attempt to get back above the baselines, which has failed. So in the next 10 hours, if we cannot get above this current level we are at and close a candle somewhere up above the 1 region of 26,651, then you can expect more downside. Now, as of this moment, we got the rejection at the adaptive and the cloud here. We were saying it's pretty thick. I did expect a stab up to these pools at the bare minimum, which we did not get. We got that rejection off of the cloud to the downside. So the cloud is still thick on the 12-hour time frame, suggesting unless you have an absolute surge out of here, that you would get another rejection if you were to come up to this region without any notable volume to pierce right through. So if you were to come up to this region and recover some of this candle here to the left, then coming up to this region would be and getting the rejection there would be reasonable to think. I would say somewhere at the bottom of that other 12-hour wick here. And yeah, so, and if you did come up here, this would cross this up for a crossover ambiguity, which happened here, for example, where they crossed down and crossed immediately back up. So that does happen on occasion, but they are worth noting when these things occur, because when they do play out, they do play out with a fervor, which is why we stuck in a short back here on Sunday. Where was it? Was it April? Yeah, it might have been this one, where we were looking at the cross down that cascaded from that time. Now, if we start to drop, wait, we didn't do the oscillator. So the oscillator is holding and starting to curve in a certain manner here. The MACD is still crossed down, has yet to cross up here on the 12-hour time frame. And if we go to the 6-hour, 6-hour also starting to play out here by the looks of it. We have reclaimed a thin boy baseline and getting rejected with a slight reclamation of the fat boy baseline here. This cloud is also thick and needs to be reclaimed. This was the weirdness that in the future we'll have to pay attention to. When it thins and goes immediately purple again, then it possibly suggests a cat ears type continuation idea. So the thinning could mean with this purple suggests that it's just a fake out before a continuation of that expansion to the downside. That was an anomaly we went over back here. We were saying normally it shifts from blue. When it thins out, it picks the next direction. So seeing that meandering around between blue and purple again, that was the thing that was weirding us out. And basically that was suggesting whatever pump up here would be fake. For future note, okay, so if you guys could remember that for me, I'll try to remember as well. When it shifts from blue to purple like that, it's suggesting whatever pump that does ensue is a fake out to continue lower, a cat ear type situation. Okay, so we're starting to reclaim this. We went to the bottom of the Keltner channels, and if you just play the K-hole alone, this Keltner channel ATR-based Bollinger Band idea, like just going to the bottom and wicking off of this, generally coming out of the Keltner channel, you're smooth to enter those V-shaped recovery ideas. So if you were using the ultimate on the lower time frame, it's most likely going to have a 6 time frames overbought. I get a lot of alerts sent to my phone. I have a perpetually open alert for BTC on the dynamic alert system. So if we go to the 6-hour time frame, we're starting to see this reclamation. It's starting to fail as we speak out of this fat boy baseline. And if we go to the 4-hour time frame, this is what Asia normally does. They pump it pre Hong Kong, and then right about now in Hong Kong they fade it. Which is why I was surprised that they pumped this into lunch. I was considering it would go further because I thought one of the other pools would take it to the upside. We're starting to get the cross up event if this confirms in 2 hours at a level reasonable enough. If it doesn't dump further from this point to cause this to cross back down, we could have a 4-hour cross up event. If the 4-hour crosses up like it did here, for example, then you have another 8 hours of upside at the bare minimum, which could give you a scalp idea of a % or 2, which when amplified with leverage could be a nice idea. So are you going to see that occur? It's up to the 2 hours from now candle close of the 4-hour here. The 4-hour on the oscillator is getting a potential rising sun and the MACD crossing up here. So with the money flow beneath the RSI, so you could see a 4-hour surge as we have this here in similar fashion. It's kind of the storylines are starting to connect as you see. And then we're starting to see that occur as we go to the 1-hour time frame. The 1 hour time frame is getting overbought, but we have been meandering around in these double top scenarios, digging our way out of this zone. And if we're starting to get a potential cross down event as we reject off the baselines here on the hourly time frame. But the thinning out nature of the cloud here is giving you the potential idea of continuing higher. So if you come down to this region, are you going to bounce off of the cloud? That is the question here on the hourly reset. And a reset of the hourly means what exactly? Well, it means, are you going to see this Williams alarm play out and reset us a little bit on this money flow and the stochastic RSI and the potential cross down event that could be occurring on the MACD formula? So if we start to reset some of this over the hourly time frame, which looks to be the case, and the thinning of the cloud continues on that path, do you get a bounce off of this 1 hour cloud for the 4 hour play to continue upwards in this manner? So this looks like it would occur around lunchtime or so after the 4 hour candle close. So that's something to note. And we go to the 15, which is looking to play itself out as it plays around with the idea of getting oversold again. The Williams is coming down here quite nicely, could come down a little bit more, and this could come down a little bit more as well. The money flow and the RSI are in good health as of this moment, but the 15-minute is probably inducing some people as we speak. Let's go back to this and see who they are taking out. They probably took out that 100x guy we were looking at in the beginning. Let's see how y'all are doing. 3 people in here now. What's up, Brandon? How you doing? Crypto Dylan, BTC wants 24/6 thoughts. What's up, Dylan? Nasty Naz. Yeah, 24/6. I don't know about 24/6. Look, why do I keep minimizing? So the 24/6 could be a possible pool. We definitely have those pools potential all the way down to 24K, like $100 billion down there. We were talking about that earlier. If you go to the earlier point, like this region entirely down to 25.3, and if you go down to the 1618 for that Hail Mary play, yeah, that could go all the way down to there too. I would suggest that it probably finds some divergence off that sooner than later, but anything's possible. Let's see where we stand on the 15. So, oh yeah, we were looking at which pools they're coming to take out. So it looks like they cut the lifeline of that bubble. They cut that bubble before. So are they coming down to the 218 million down here at 26,129? That could be the idea, that it comes down to 26,129 would put you 129. That would put you down here. Abouts. So that 200, that 50x character could be the target they're trying to wick off of for a potential cloud bounce on the hourly, if they come down to that guy and thin out the cloud by a purchase off of their order. But this would be the area, the zone where you look for that retest if this shift in character, they call it the choach in smart money, whatever you want to call it, it doesn't matter. It just means a shift of making a higher high. You had a high and a higher high and a higher high from that and a higher low. So this is where you have that shift in character, the potential shoulder, head, and shoulder out of here idea. So you can just take them or paper trade them, whatever it is. You test the theory and see if it comes to fruition. So it looks like it's coming down to those pools on the 1 minute time frame of these guys down below, as we see the potential cross down event occur on the hourly. So basically in 2 hours time, you're going to have the 4 hour candle close, and then if that sets off a hourly cross down into motion, then you could be seeing that stab run for profit be even lower. or you could see on the 4-hour time frame. So it all depends on how this cross up confirms or doesn't confirm in 2 hours time. All right, so the cloud is not looking like, if you were to get that surge up to the super trend and reject off this bearish super trend, then you can still expect more downside. The candle in which we had the most volume was on this sell-off candle here, which did not really take us with extreme passion to the downside here, and we had a lot of meandering and less volume, less sell-off pressure here. We're not getting really much buying interest step up to the plate just yet. All right, so we're gonna go into I'm gonna go into the dollar yen as per the suggestion. This is the last time we looked at it, was quite some time ago. We can see where we had it. We were talking about the double top, double bottom scenario, which the area of interest did play out after a lot of consolidation. So we basically stopped looking at it since Thursday, April 13th, but the idea ensued regardless. And we are seeing this double top scenario of who is saying, he was saying there is a local topping on the higher time frame. So let's see if this local top is in for the dollar or not. So we're going to go, you're saying USD JPY. Is there a difference between this and that? I'm kind of a noob when it comes to Forex. We are at the top of the Keltner channel on the daily time frame. So you generally chill out when you reach the top of the channels here. So you could do some consolidation and extended M formations. They like to do the extended M's when the short seems like the obvious play to take, because they want to induce maximum pain to the shorts before actually sending it down. And so if you had this clear path to the upside here, then if you were going to start to fade and cross down, then you'd see an extended M before you come down. One thing that's different in this scenario right here is you have yet to see this cross down event on the daily time frame. We're still holding the thin boy, and when the separation between the baselines still remains strong, you have this separation strong, then until they start to get closer together and cross down, you're not necessarily at the top just yet. So by the looks of it, it looks like if you do happen to get like a day of red or two, then that would be the thing that starts to bring these lines closer together, similar to here. So if we're at that point, it would be at this point, but there's no real way to gauge it on that baseline alone. The only thing I'd be looking at here is that we're coming out of the Keltner channel, which you generally come back into. Similar to here, we came out for a few days and then we came back in. It's kind of like this self-correcting organism. My friend and I were talking about it, price action within the framework of the Momentum Master thing, and it looks like an organism going to eat liquidity, kind of self-correcting its behavior and coming back into a path that's laid out for it through time and space. It looks like it's like an actual organism. So as this organism starts to reach outside the boundary into the unknown, it gets scared and comes back into the known universe. So it's possible that it starts to retrace a little bit here, but you might be in store for a better one if you wait for that extended M pattern. But yeah, if you have that potential of the reversal, it would happen at a outskirt of a Keltner channel. So as we go to the lower time frame rather, we can look at the zones as where we are trying to recover here. Let's just put this here to see where that level is. So we came to this point here, which happens to be a previous support structure. Are we meeting at that zone for a potential resistance? SR flip potential, is that what you're talking about for the topping, to create a shoulder on this on the 4-hour time frame? So you're getting overbought on 5 time frames here at the outskirts of the Keltner, And then when it's bullish, it rides the outskirts of the Keltner, coming out and coming back in, coming out, coming back in, coming out, coming back in. So you could be seeing this coming back in on the 4-hour time frame, but it looks like we're overbought at 83 and starting to come down here. And so seeing that 4-hour bounce on BTC as the DXY dumps could be the thing you're looking at. And the 3-day is also overbought by the looks of this screener down below here, and the weekly also and daily getting overbought too. So it's run for profit Friday, and where does the profit exist is the question here. We are failing this thin boy baseline, so it could come back down in this similar fashion to the downside a little bit to retest off of one of these fib levels. This is the 382 zone. Let's try to redraw this because it's been a while. All right, so we're going to take this retrace from the top here and ride it down here. So I do it in the terms. The reason why I look at fib retracements, it's called a fib retracement because it's a way to build a path out of the retrace. So if you look at this as a retrace to continue higher, then you draw it from the momentum going down here, and your 236 would be your entry point. And so that's why I put this in green, because the 236 will lead you to the money. So I make this green at 101.989 would have been your entry, and sure enough, 101.989 bounced to the T on the 4-hour time frame out of there. Got a rejection at the 382, kind of consolidated, bounced off the adaptive, continued higher to the 0.5 golden pocket, hence why it's golden, and then you surged beyond into the 618. So we're currently in a premium level. So this is not where you'd want to long. This would ideally, in smart money concepts, be where you look to short. So you'd be looking to short at this region, and we previously entered into the 6.5 of that region, and we are starting to reach up into the 706 potential rejection here. So if you come back down into the equilibrium level, it would take you down into this 103.37 zone. But so far, so we have been so good on holding this super trend. So until you break this super trend level at 103.667, we are still on path to going higher and potentially up into that 104 region. So I'm not necessarily sold on the short just yet. You need at least 2 hits there anyway. So you need like 2 or 3 hits to the highs before you start to fade, in my humble opinion. So are we going to see this reversal here on Friday here at this level? I am not sure. But this institutional region at the 706.65 is where you like to see the trapdoor open to a reversal idea or a potential surge up. So it's where something interesting likes to happen on those 706 levels. So I'm not a aficionado of the dollar charting, but this was put out to you back Friday, April 14th, and we did see that rounding out nicely from that area of interest. All right, so that is it for the dollar for me. I will go back to Bitcoin for one last recap here on what we're looking for the close. So we're looking for the 4-hour time frame until New York. I'll try to update again for New York open. Hope I got refreshed in my lack of slumber, so I should be able to go back to the regular broadcasting schedule. So if we look here, we have the potential cross up of the 4-hour time frame, which could be negated here in the next 2 hours. So we look to see how this 2-hour candle closes. The thing we're looking for the hourly to do is to reset some of its stochastic potential and kiss its own cloud here as it resets some of its potential, and seeing this rounded out nature of the cloud continue. And if it does continue, that leads to a slight bounce to be in. This is one leg of a W, so you'd expect a second leg to put itself in some fashion if you were truly going to the upside here. So having this come down and hit a pool of liquidity of some kind to spawn some divergence That would be nice to hit this guy at 26,129 and bounce off their dead carcass to these pools of the rounded out bottoms they're creating to catch these fish that we laid out earlier. So seeing this bounce potential up into, let's try to give you some region areas of interest, shall we? 27,095 is a $180 million 100x pool. 26,855, you have a 207 million pool. That one looks highly likely to take. 26,855, let's put that on the charts. 26,855. 26,855. Let's just put it in that general vicinity. So you got some guy chilling at this wick here who shorted $280 million so they could come up to that guy at some stage and gobble his liquidity for not paying himself. So that is a 50x pool, also stacked with this guy here at 190 million at 25x. So when you get these stacked bubbles that are quite large, then they become quite nice gravitational points, and that's where we come to the concept of the noodles and seeing these bars stack up and be thick and having more noodles than broth. So there's currently more broth in this exact region here, but you're starting to see some shorts open up in more passion than the longs here as we drop. So as they try to go into these pools here and more shorts open, then it can make the idea of coming back to here real. All right, guys, that's my story, and I'm sticking to it. So I will keep you updated. We only have about 11 hours before I will be back again, and we'll update and leave this as is and see where it went from there. All right, so thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same, keeping the fire, the accuracy, the precision, and all that fun stuff, and keeping you up to date and no muss, no fuss. We'll be back in a jiff for the New York Open, so we'll catch you guys on the flip side. Peace.